Hello, everybody. I hope I didn't scare anyone. I even scared myself there for a little bit. Okay, I'm lying. I hope I scared everyone. So, how are you all doing? Hello to everybody from Casey to Philippe. Hello, Philippe. I don't remember seeing you here before. Welcome, Mr. Philippe. Welcome to the fold. Hello, Stonks. How you doing, brother? Leo. Lucas, Christoph, of course, and Stonk again. Hello to all of you brothers and sisters. As Christoph there said, sisters from other misters. Hello, Judy. Hello, Judy. So, without further ado, let's dive into things. Let's look at today's nothing burger with which I'm sorry, it really is a nothing burger. To be more objective, really got more or less kind of this nothing behavior. We did expect a bit of a gap. It did outperform. It makes sense. People are thinking they're buying the dip. Everything is nice and beautiful. We will kind of re-examine that in a couple of minutes, but for now let's look objectively what we have. Let's kind of follow the regular routine as we usually do, see what today had for us and what really it seems that we're going to have throughout the week. So all in all, we had a bit of a gap, wasted some time on the top end of things, and started correcting lower. Realistically speaking, if we want to look at our usual suspects, really we can see we kind of dropped down. So the overall market, sort of the view on things is not all that bullish unless you're Nvidia today, which had kind of a blast, Google or Meta. The rest of them, we had more of a mixed day, although MU right there does stand out with 10.94%. Plug today did very nicely, about 20%, although we're expecting it to come to an end, sadly. But yeah, now going back to the overall market, really what we've seen today and what should we expect for the upcoming sessions for this week, really. So we can skip 1 minute because 1 minute is not all that interesting, and we can go right away to 5. 5 really were a little bit more bullish than we would expect to see based upon how price action behaved. All in all, don't forget that this was still technically a rally to the upside. Now technically we are higher than we finished up. So although with a deeper correction and this very weird misbehavior at around 80 level on the stochastic RSI, subsequently brought up this almost nothing burger day. Yes, higher, but still correct back down. Really, what have we tested? We've tested back at the 6,000, was the real test of what we've seen today. Really, again, nothing burger to kind of go back to the regular charts we normally look at. Again, let's look at 30 minutes here. That's going to be maybe a little bit more interesting and indicative of really what we might see in the upcoming sessions. Realistically speaking, 30 minutes is a lot more bearish. We're seeing SMAs creeping up here from below, although that SMA is not really adjusted 30 minutes, but let's set that aside. What we are seeing that we really ended up basically testing sort of, well, again, kinda testing similar to previous resistance. And really what was the test was here the median that we've been on for quite a while, this yellow red line that you see right there. So really which is by the way part of the larger channel, do not get confused with the smaller channel, which is here it is, here it's median. So we've been testing the median of the overarching larger channel. Here it is, you can see it sort of in the background. We ended up hitting the bottom, now we're here. Can we still make it higher? Well, will this high based upon this low where we're at, if we will truly go bullish as it might potentially be, we'll really end up potentially just hitting that resistance. So all in all, again, testing a lower high, nothing all that weird, right? Nothing we've seen before. Let's go back a little bit. No, well, maybe I'll be able to show you. Was that? No, that was that point, right? So yeah, the highest high was that. Right, that's what that was this one, right? I looked too far, went too far. We're looking at the 6th of December ish. So even given that high, we're kind of matching with the previous highs. Nothing all that surprising. Basically, what we end up doing here is retesting that 6,000 again. Again, nothing all that surprising. How about momentum? How does it truly look like on the 45 minutes? Those who are more hawk-eyed noticed that we're far more bearish than bullish. In other words, we're slowly sliding into oversold territory. Now let's compare it to actually how the price action. I have chosen far too much stuff. I don't want to delete all that. Let's remove just the nonsense right here. How does that look in the context of where the price action is at right now? Let's be more realistic about this in that sense that, well, if we say in 45, 45 is far more dominant over the smaller time frames that we saw, and this far more indicative of what we're about to see. So really we are far more bearish than we are bullish. In other words, pardon me, what we're seeing here currently, if we are able, if our if our red line right here, the bearish momentum, is able to break below that 2009, as you can see, testing the 20 this very second, we're just kind of, trying to push it. And so yeah, if we will be able to break below that 20, what we will result in is, of course, the closure of this gap that we've generated very easily, and potentially a retest, or at least a movement towards that median that we've mentioned before. Roughly the same area, if you notice, in terms of the lines, in terms of the numbers, it's roughly around 59.34. And subsequently, I believe we're going to see something similar on the 1 hourly, and we're going to see a continuation of the deterioration of that bearish momentum or bullish momentum. So continuing to be bearish. Subsequently, we end up at 59.09 very easily. In fact, we can do that literally in the very next session. Remember, we spoke about my red bubble about this week. We were expecting to see the red bubble, right? The red bubble. So we are currently somewhat higher than we were. Corrected somewhat significantly. So again, testing sort of the same ranges. Is that still realistic to see that we will end up in the red bubble in the upcoming sessions? Well, let's look at this. For the 45 minutes right now, it does look very bearish, right? Now, here is the interesting bit. On the 1 hour, it is not yet full-on bearish, but if we're able to slide below that 50 range, if we break that 50 range, what will happen is that this current cool down, right, from the rally will become and overturn into a continuation of the deterioration of the longer channel. Basically the same one we've entered at around 27th of November last year. All right, so towards the end of the year, remember there, we kind of entered the new channel. I was suspecting it's going to be a channel that we will retain. And here we are, surprise, surprise, we end up testing the ceiling. And now we're starting to go back down to the bottom. We have a gap to close. So yeah, pretty good, pretty good. I would argue that we've kind of finalized what we expected. In fact, I'm thinking this channel kind of opened up a little bit since we last time looked at it. Based upon this price action, it kind of screwed up the average and so pushed it out a little bit, although I could be wrong, and our average was actually determined by the bottom here. That's what my assumption is, but still it could be that it moved out a little bit. Now, let's look at 4 hours. Well, again, just before we continue, let's make sure everybody remembers and was paying attention. Again, bearish, not full on yet, but give it just roughly another session like we had before in a couple of days, we will result in breaking the 50, accelerating the bearish momentum, giving us a closure of the gap, and that 59.09, potentially continuing the slide of this into oversold territory, giving us 58.54. So roughly about $100, $110 lower from where we are at right now within roughly a session, literally, or maybe a couple. So towards the end of the week, it seems that we should be hitting 58.29. At least this is for the hourly. Remember, the hourly allows us to predict, based upon the structure of the candlesticks and the duration of what really shows, we can roughly predict at least a couple of sessions outwards based upon how the structure is. Now let's confirm it, right? Let's see what the bigger structure is showing. Well, we can't really confirm it now. We're actually having somewhat of a contradiction here, because the 4 hourly at face value is a little bit more bullish. That means that basically that negative momentum that we've seen right before plays into the bigger picture, the larger scheme of things. And if the larger scheme of things is more bullish, then this is going to be just the opposite of what we said before. The 1 hour is the cool down period on the bullish. So basically, again, bullish trend, right? Cool down, so correction, and this is a continuation of a bullish channel, basically predicting. So we're saying right now what we're seeing temporarily is this cool off, right? It still is a thing that exists and will be playing a part right here in the weekly. I probably need to change color so you guys don't get too confused about my lines and everything else here. So you can see the idea that in the shorter range, yes, we are breaking downwards, right? That's sort of in agreement with that. So we're correcting, we're having a cool off. Let me make it differently colored as so. That's going to be beautiful like that. That works wonderfully. So we're seeing kind of a cool off, and potentially, if we're going to continue to see more bullish momentum penetrating into overbought territory, to be more precise to those who don't know, basically breaking through this 80 range on the stochastic RSI signifies acceleration on the bullish momentum. Basically, anything that is taking place above the 80 range is an acceleration of that bullish momentum, that upward sentiment that we had before. Where could it be going? It could be potentially going to finalize and close that gap, leftover of a gap that we have from before, or maybe it wants to try and hit that 6045, right? That's kind of matching these higher levels that we said before, or potentially a newer channel that we're developing over time. We'll see how that really plays out. For now, I would argue that temporarily it appears to be slowing down. That's something that's very important to notice. It's slowing down as it's hitting 80 right now, and if it will not be able to truly penetrate properly with both ends right here, with both forces over the 80 range, that will give us with this more or less nothing burger wave. Basically, it will be an impulse that will feel as if we're about to do something, but really we're just kind of retesting the potential channel that we're slowly developing. Right here you can see a descending channel on the top end of things. Now let's look at the daily. The daily we know is far more indicative if we want to consider what is the upcoming week has for us in store for us. The daily is objectively bullish. Let's look at this and say, well, we have hit off of the 20 range, right, which is the opposite of the 80. In other words, we were not able to penetrate into oversold territory, and so all we got here is basically a nothing burger for those who are expecting a breakdown, and well, we're cooling off. But remember what we're saying, and of course it's not visible yet right now, but we'll see some hints to that. We're seeing oftentimes when the market does hit a low, it's almost like it bounces up. This is this more or less a very better depiction of a dead cat bounce. This is how it truly looks like on the indicator level, right? And oftentimes people are misled to think that, oh, well, that's good, this is perfect, we're starting basically a whole new trend. I would argue that this is misleading, and in reality what we're having here is a deterioration downwards, and as we will have convergence and divergence of the forces again, we will end up going into oversold territory and subsequently seeing more bearish momentum taking us slower, as we've seen on the time frames before the 4 hourly, before the bullish momentum we recognized, as well as with this daily, which not surprisingly so, they actually are very much related. The 4 hourly and the daily are basically one and the same. It's just that on the 4 hourly chart you also see pre and post market, although we don't see it on the S&P. On the SPX, simply because it does not happen on this particular contract, and on the continuous contract it does not appear as pre and post market. It appears to be just as regular trading. Now let's continue to the weekly. What do we see on the weekly? Now here the weekly is where the real sort of potential pain that we've been talking about, that I said it could be hidden under the surface, and really what we're expecting is more or less this bearish momentum. Pardon me. And so really what we're seeing here is a breakdown of the bullish momentum. In fact, we're already in oversold territory. Although we are seeing convergence of the forces, it's not yet determined to be a full-on convergence, and so we might continue and see more pain as when this shorter range bearish momentum that we looked at on the smaller time frames will actually start taking effect. It will start printing on the closer range time frames that are mid-range, something like in the vicinity of the week, the daily, of course. We'll see a slight deterioration of that momentum, giving us subsequent also a bearish momentum on the price action, as we said, so it will print, the bearish momentum will print right here as we see it on a larger time frame, and we confirm it on a smaller time frame. We'll start to see it all printing. In other words, we will see the potential price action break down to that 59.09. As we said, this will break apart, continuing to give us more breakdown in the price action, more bearish momentum again. So it's far more likely, looking at this, that even if we're going to have a slowdown, a cool down period, retesting that median, all in all, it seems like it's going to result in a continuation to the downside. Even if temporarily so, we're going to have a cool off period. And basically this is the downtrend as it starts. Here is the cool off period, and then it continues to go down. Vice versa, sort of similar to what we saw on the smaller time frames, but here now we see it on the larger time frames, which means we're going to see it going or persisting for longer. And if it's going to persist for longer, of course, as you can imagine, we can do a lot more damage in several weeks than we can do in several days. Pretty simple, right? Again, they don't necessarily cancel each other out. Oftentimes people look at time frames and say, well, how is it that on a smaller time frame I'm seeing, bullish momentum, on the larger time frame I'm seeing bearish momentum? It's actually quite simple. Both are correct. It's just that we're going to see temporarily on that range of the smaller time frame, which could be, let's say if it's in the hourly range, it will be a handful of hours. A handful of hours also can mean a session. Don't forget that. A session in essence is a handful of hours. So the hourly charts can actually show you an entire session, but all in all, if you look at the weekly chart, you can almost look out and project almost a month out. If the better you are, the more likely you can actually project a month out, which of course can give you a little bit more than just a handful of hours. Let's be honest about that. Now, let's look at the monthly. The monthly is actually sort of the source of the fear, if you will, for a lot of technical analysts right now, a lot of technical people who do trade or at least base their action in the technical sphere of things. Remember, we have not yet broken below the 80 range, so that means we are still in a cool off period on a bullish trend. But as it is appearing right now, it is far more likely that we're going to continue the deterioration of this trend and subsequently resulting in more bearish momentum, more bearish price action, right? As we said before, same thing on the larger time frames. It's all applicable. Now, the question is truly whether we will be able to penetrate the range of that 80 on the stochastic RSI. If we do break below 80, in other words, subsequently we're going to continue moving towards the 50. The quicker we move towards 50, the more bearish the trend will become. The quicker we break through 50, the more bearish it will print right here on the price action. So if we're objectively looking at what the monthly is showing, it's as if we hit this glass ceiling, which, well, you can say miraculously, weirdly, not weirdly, coincidentally, you want to call it whatever. It is also that very same ceiling that we ended up hitting during COVID. Right here, as you can see right here during January 22nd, December 21st, right? Kind of that range when we hit that. This is when we started correcting to the lower end of the channel. Right now we're at the edge of the channel. We're also testing the 6,000, which is a very strong psychological level. So it's just kind of weird how we're seeing how we're hitting again these very strong resistances that played a very strong role before and resulted with the price action diving down to its very edge of the channel, which in this case results with roughly about 4,700, just making it to the bottom of the channel, let alone, some of you know I'm projecting a little bit more of a continuation for this bearish trend as it starts, right? And we do start to see very distinct and clear hints for that to play out. Again, right now it's not clear whether it's going to start tomorrow. Some people like myself are arguably saying it has started for quite a while back. It's just that this tanker basically takes a while to turn around. In fact, if we want to be objective, we've been hitting that very range that we're testing right now. Here is month 1, here is month 2, month 3, month 4. In other words, we have been doing this for a whole quarter, right? So again, which is all actually not all that different from before. If you're objective, you realize here we've done something similar. We spent 3 months doing that process. This time around, it takes us 4 months, right? So it's not all that different. It doesn't have to be a particular amount of months. In fact, it can be dragged out for a while, if you will, but it's very unlikely. And in fact, if we're objective about the structure of the candlesticks, we're already starting to see a change in harmonic structure. Basically, we had this head and shoulders complete, or rather the head, the shoulder complete, the head now is being complete. And if we're going to continue the deterioration of this downtrend as we're predicting, we're going to start creating that, continue completing the head all the way to the neckline and moving into creating the left shoulder. No, sorry, right shoulder. Brain is not working. The right shoulder. Now, now let's switch to the, what is that? Charting art. But smash Greg. Thank you very much, Johnny. I appreciate it. Hello, by the way, Johnny. Hello. Hope you are doing well. So you're starting to see this basically. And by the way, another thing that prints right here on the quarterly is very clearly how we had a very speedy sort of movement towards the areas, towards the ranges where we're at right now. And now we're starting to see with these shrinking candlesticks, the deterioration of the momentum. Yes, we had one impulse in between that was stronger and sort of seemed as if we re-accelerated. And yes, that did happen, but that happened due to some fundamental conditions. If you remember the dates and remember how the market was perceiving things, and so basically an artificial push. Another thing we're seeing again, very important to notice, we're unable to break the 80 range, it appears to be, because we're slowing down, and again very indicative of that correction that I'm projecting and expecting to see further down the line. Right now the 6 months appears to be very bullish, although we know that is a misleading structure, because remember, it is below, it's currently still is below the 50, and basically signifies more of a downwards a change in things. The trend changes, and this is the only way the stochastic RSI can show you that. Pardon me. And because, well, the stochastic RSI is not intended to show you, or rather it is capable of showing you the overarching larger sort of cycles, but depends whether you understand what it is that you're looking at, because you have to remember the context of which you're seeing what you're seeing and how it appears to be with regards to the overall structure in terms of time and cyclicality in the market. So you really need to know what are the particular signs to look for to recognize that there is a cyclical factor going on, which, by the way, I will mention as I go. I do have an Academy one-on-one, only 2 empty spots left for right now. So if you want to get to know how to do technical analysis in a far more of a professional way that even we do here on the lives, to understand it in depth, more so, one of the things that I emphasize, and what is sort of the grand big thing that is different that I teach from other communities and other courses, that I explain the why. Oftentimes, various analysts will tell you that you use this tool here, there, and this in such a way, but they will not explain the why. The why is oftentimes very, very important, which sadly I've discovered that a lot of these so-called analysts will not even do that. But you can ask my students that are here. I go in depth on every little detail, and more so, very importantly, the why, because it's not just how to measure something, but it's why we measure particularly that and not something else. That is sort of the grand question that I noticed that pretty much no educator within the sphere of the TA really teaches properly and explains. And if you don't understand why you measure particular areas and not other ones, guess what? You literally have roughly about half of the equation, best case scenario. That is if you know how to do the analysis itself correctly, which again, sort of in a way doesn't make sense, because it does hinge on knowing some of these things. And I do teach it one-on-one on my Discord. By the way, shout out to the Discord and to the Discord members, to all the new members. Thank you all for joining. By the way, if those who didn't notice, the founders member has founders tier, sorry, have been locked, and that's it, will never be reopened. At least there's no plan to do so in the near-term future, or pretty much ever again, to be frank. Right now we have these new tiers that I have made, and of course you can save up 15% by clicking that little clicky thingy and paying for a year in advance. That way you can join the community and hang out with us on the Discord every day. First of all, you'll be informed whenever I go live, and you'll get to enjoy and hang out with us right here where you just saw me jumping in on the open forum literally every day. Of course, there is more stuff that I'm writing and creating for the Patreons, various videos that I post for all of you guys to watch and understand how they sort of relate and correlate to things in the market, psychology, philosophy, you name it. Open chats, we do discuss various assets, like so far right here. I do post various tickers, various videos right here, of course. We have our tickers channel. This is where we discuss various assets and their behaviors and charts and stuff. Of course, you can ask your own questions, right? And we can discuss them in the open forum right there afterwards. In the one-on-one right there, this is where I have my one-on-one academy, highly recommended. You can jump in and ask my students. You can ask their experience. There are plenty of students already finished the academy, and so they can give you their opinion on things. I'm also working on that channel that I will have the reviews of the students. You'll be able to read them. Buy low and sell. Stonky. Indeed, smash the Greg and press the like button. Caress. Okay, I see. Brob Bros of charting art. I wouldn't call myself that. It just makes it sound completely nonsense, and so I would argue I'm just a good analyst, if anything. I in fact, I kind of don't care about the how everything is being. Like I will one of those guys that if you compare what the way my charting looks like is like a chef that cares a lot more about the taste of the food rather than the presentation. I've eaten at plenty restaurants that are super fancy, and honestly, I do feel like at least half of the courses and half of the things that are given there, and they're just presented nicely and all that, but really they're not all that amazing. I've eaten a lot better stuff that doesn't necessarily present the best, but it's a lot tastier. So I don't care about the quality of the drawings. And in fact, you guys know I cannot draw a straight line to save my own life at times, most of the time, in fact. So but that's just I get it, Ellen. I get it, bro. I know you were not serious. It's just since you already said. I'm late, but I smashed the like button. Johnny, yes. Hello, Johnny. Now, Johnny, thank you very much. By the way, yeah, thank you very much to all of those who smashed the like button. I tremendously appreciate it. After all, it's goddamn free. I mean, why wouldn't you? Like, dislike, doesn't matter. Press whatever you want. Really, it doesn't matter. Just press something, Also, after taking courses, Greg is always available for questions. That is actually true. That is true. I do as a one-on-one member. You don't have to be a Patreon. You basically gain membership for life, and you pretty much have access to me roughly on a daily basis. In worst case scenario, you'll have to get by maybe a day or two, maybe worst case scenario, without being able to talk to me, and even then it's probably pretty rare because I do love the community and I do try to hang out there. Even I sometimes plan to just jump in for a minute and say hello and end up staying there for like an hour. I mean, the guys can tell you, answering questions and whatnot. This is what the community is all about. But more so, we do look at the technical analysis that we know how to do, which is very important, and it's a big part and a key part really of the community and how we look at the market. So don't hesitate, join in, ask me, DM me about the One Academy. There are only 2 empty spots left right now available. Definitely don't miss out on that one, because when the academy is full, I'm no longer taking students until some of them finish, which sometimes can take some time, months in fact, roughly around 3 months ish to each student. Only some 50% of the audience has pressed the like button. Let's get it up to 80%, folks. Stonky, very correct. I like your comment. That is a proper comment, sir. We do like to look at percentages, which, let's see. Yeah. You know what? Since we're already there, why not? People of Plug, those who don't know, I myself have liquidated. Some of my peers who also have been in plug. We have temporarily liquidated our position in plug because we do expect a deterioration of the price action. As you can tell, there is a larger trend going on, and we're kind of expecting the price action to break down as it hits the ceiling. We do have a bit of a gap there to close still. We have some chores here. We are probably going to move into this wedge as a bare minimum for right now, if not slide back down into this very channel. Currently, I would argue that we still have some ways out to test this larger sort of wedge. I know how it starts to look, how we're picking up, and it's all nice and dandy, but I would argue that we still have some time before we really get the real nice rally. I think that what we're getting here is going to be resembling what we have here. So I would say, no rush. If you feel like you don't want to take the risk and don't want to be thrown out, of course, you do you. Remember, nothing here is financial advice. It's just kind of the ramblings of a madman on the internet, if you will. And technically madman. But yeah, this is what we're seeing. So as unfortunate as it is that we do still expect some more bearishness, it doesn't necessarily mean that it's all that bad. It's a nice wave. Some of us have liquidated and took the profit off the table. Some have stayed in. Some planning to rebuy when we drop back down. To each their own. Remember, nothing here is financial advice. You do you. But just for you to know, yeah, that we are out of the position. Some of us made 30, some of us made 40, some of us made what was that range, like 38%ish, I think. We're able to be squeezed out there in the 38% range. Nobody really made 40, but close decently, of course. That depends on how well you were able to DCA into this as we were going. But yeah, well, as far as I know, everybody's out. So you do you, of course. Does that mean we no longer want to be playing this in the future? No, it doesn't mean that. It just means that now we're going to be waiting for it to break down, as it is presenting right here. For example, in the 1 hour, it's presenting like it's going to continue to the downside, which we should expect the 290, potentially 260, probably 250 because it's a psychological level. So that's the strongest level we are actually expecting to see. So 250 is the bare minimum where we're going to start being more attentive to it, but really I would argue that I'm going to be picking it up again at 188, maybe the level of 188. That's going to be the range where I'm going to be picking it up. You're like, Greg, that's so low. I know, but that's what I'm thinking. That's what I'm seeing. You do you. I'm a member for the free Area 51 bumper sticker that Stonks promised me. For that, you'll have to be abducted. For that, Stonks will need to fix his UFO that he keeps in the garage for the last year and he cannot fix. That's the problem. His tractor beam is broken. The dude cannot abduct anybody. That's a problem. He's working on the spaceship, I promise. Do we want to do some tickers? I mean, there's not really much to see. Everything kind of presenting as expected. Palantir is actually breaking down while S&P is holding still. Still, I would argue that this is relatively good. Tesla gonna be testing the 400 within like a day or so. Right now 410, which by the way you can see we had here as a line, as a resistance. Here it is. You can kind of see it in between the jungle and between the noise. It did play a bit of a role. Not enough for it to hold off the price action right now. We are sitting on the top of the 410. But as this price action starts to be structured, it is far more likely that we're going to see it deteriorate. We saw that in the indices. Sorry, wrong time frame. Here it is. In the 4 hourly, we're seeing something similar that we saw. And in fact, I would argue that most of you are not familiar, but these channels themselves are partitioned to smaller channels, if you will, partitioned to small bigger channels to smaller channels. But we've kind of seen hints of that before, when we recognized and identified that sometimes we have the more narrow, quicker channel going right there and just kind of breaks down the main channel in half, and so you have what we would argue as almost this internal channel. And so remember right here, there we go. Actually made it work now. So you see what we're getting here is kind of this overlapping structure, right? So it appears to not make sense before you see the slow duration channel and the long, slow and quick. And once you see them both, suddenly it all makes sense. Really, we're testing here the 420 range, we said, 410. That's kind of where we're at right now. We haven't yet broken below the 410 again. Once we will be continuing to test. So basically right now, to put in simple terms, 400, 410, 420. Right, this is kind of the 3-level range that we're testing right now, and probably going to be seeing the continuation of this downwards behavior, bringing us lower to the bottom, which is 350, and coincidentally matching with the bottom of the longer duration channel. You see, it all falls in line. It all kind of speaks a singular language. It has a narrative, right? So you can see the narrative kind of playing into itself and confirming itself, right? So we're seeing confirmation. In fact, by the way, don't forget, in the daily we're already in oversold territory. Yes, a bit of a cool off, but all in all, I would argue that this is going to continue and be unpleasant as we go for a little while. So get ready. Even with corrections, it's going to be continuing to the downside, creating this head and shoulders formation, retesting stuff, and ending up on the lower end of things. Ta-da! That's Tesla for you. Nothing all that surprising, really. What is that? Let's see what Intel has been doing. What I've been doing. Kind of a downwards trend. So we're seeing a lot of pain. I mean, we are seeing a lot of pain. Don't forget, we have seen... Oh, by the way, another thing that most people didn't notice, oil is picking back up, which I would argue partially related to the plug thing. I'm not sure about the timing, because... really, we oftentimes in plug we really do see things that are hinging on news or good reports. Sector update, energy stocks rise late afternoon. You see, it's a sector-wide thing. It's not individually plugged. So that's another reason why we want to be opting out, because we know energy climbs steadily and slowly, and it's not going to be just this rally to the upside. And probably as we are hitting the top of the channel right here, we're going to be seeing a correction, subsequently giving off a smelly smell and unpleasant reaction on the overall sector. So you see, it kind of all plays in hand, right? That's it. This is the summary for... Oh shit! Scheiße! We close the market. Yeah. This is the continuous contract. This is what we're seeing. What are we seeing? We are seeing really that we are... well, what are we really seeing? What are we seeing right there? Let me see what we're doing. What, where, who? We are seeing that we're at the final squeezes of the lemon juice out of the peel. In fact, we're fighting that 80 and are unable to break on the 5 minutes. Already oversold on the 30, oversold on the 45, oversold on the 1 hourly. Starting to show cracks on the on the 4 hourly. And so subsequently we can probably rely on the daily looking kind of crappy, although not at face value. It is going down, but those who see, who don't see. It will flip over soon, I would argue, and do this wonderful thing. Weekly, in fact, we're already oversold, similarly to what we saw on the regular contract right there, right, on the weekly. And so slowly we're starting to see the deterioration of the price action. Why am I zoomed out to all Timbuktus? That's it, boys and girls. We're seeing confirmation right here. This and this plays hand in hand. Of course, they're pretty much one and the same. The only difference is that this is the continuous contract, and basically what we're seeing, that overnight price action and pre-market price action does not change the overall structure. Exactly. Stonks, the best stuff is on the Discord. Absolutely. I agree. In fact, all the stuff is on the Discord. The Patreon is basically just a gateway. Make sure you realize that no posts or no discussions truly going to be held up on Patreon. Patreon, you simply sign up through it. It gives you the access, the keys, if you will, and then you go to Discord, and then you are able to move beyond the stage where for some reason we still have a bunch of people stuck in limbo or unable to figure out to look at the FAQ channel. You see a bunch of people stuck in limbos, and we have all the explanation of how how does it work, and how do you connect your account. Just press this wonderful thing. It takes you directly to the menu you need, and then you're able to connect your accounts. And yeah, so don't forget to use this link when you do show up on Discord. You don't need to see this. This is unnecessary. And yeah, this is it. So don't forget to check out the rules right here when you join in. Say hello, read the rules, read the disclaimer, then go to FAQ. Connect your account once you are a patron. You see, it's particularly oriented towards Patreon. If you don't understand the instructions, you can watch a video by clicking this link. Although really unnecessary, trust me, it's all self-explanatory in here. Pretty much press this link, connect it on Discord, on Patreon, done deal. That's it. Don't forget, 2 final spots in the academy. Must be rough to be stuck in one. I'm not sure whether he's stuck in the Lambos. Not that kind of Lambos. Stonky, you're confusing. It is the other stuff, Lambo. No, it is not that. So yeah, all in all, we got a nothing burger today. We potentially could be seeing, a closing of the gap on the top end of things, maybe sliding to close the gap on the bottom end of things, but really is starting to stink as if the market is going to slowly deteriorate and break down. And so, yeah, get ready. The market's showing cracks. The closer we're getting towards Trump's inauguration, the more suddenly the same old things that were fine during Biden's administration, if it's unemployment numbers, if it's how they had to change the definition of recession for people who said recession, like myself, to be wrong. Well, I'll say it this way, and I've said this in the community multiple times. If they need to change the definition of recession for me to be wrong, then that means I'm right. Okay? That's just as simple as it is. Inflation is going to strike back. Bank runs potentially already starting to be expected. The banks are, by the way, are already foreclosing on homes. Remember, because they postponed taking mortgage payments from people because of how difficult things were during COVID. And well, guess what? Time's up. Time to pay. And people are actually in worse debt now. I mean, if earlier they could have imagined paying, right now they really are struggling. Like we said, inflation, shrinkflation. Shrinkflation, those who don't know, is actually when the products are shrinking. You end up paying a higher price while the product itself is shrinking. It's like the price higher, less product at the same time. Pretty crazy, right? So just kind of, it's like when inflation hits such a wall that it can no longer proceed and increase, they start to shrink things, and we call it shrinkflation. So there's that part of things. If you talk to experts from the housing market, people basically from real estate, they'll tell you exactly how things are bad right now. We coincidentally do have a couple of experts in the community. They have been warning for quite a while, and now they've been saying, like, look, guys, what we're seeing is very bad. Very, very, very bad. And the beautiful thing is that we have several of them from different regions, and they all say the very same thing. Basically, the only people who are buying are only those who tremendously saved for it, or really are pretty much putting themselves in prison right now, and we'll see how they will be able to deal with the mortgage later down the line. And let's agree that they're giving this mortgage in the first place because the banks are planning to squeeze the living bejesus out of them. So yeah, all the fiesta is coming to an end. All the same things that somehow were not problematic during Biden's administration are going to somehow become again problematic during Trump's. And I don't know if you noticed, but the whole world is going to shit in a handbasket. And I'm not even talking about what happened in Germany, which is just a horrible event. I don't want to sort of deviate into that direction right now. It's a very painful topic, but guys, be attentive. Really listen to the news. Notice how much crap is going on where, and we really expect from this to move on to normality. In fact, it seems like we're potentially seeing another COVID, starting in China or something, although they were being promised that, no, guys, don't worry, this and that. Can you guys imagine something of this sort hitting the economy of the world again? I don't know if we're ready for another one. And I mean, full-blown riots and things. I don't want to even imagine how things will look this time around. And it's not just about the riots or not. Screw that. Most countries can manage that. Countries, you know which countries will have riots? Those who have them anyways right now, right? So objectively speaking, it's like, can things, get a lot worse? Sure, yeah, they can. They're far less likely to, but economically speaking, it almost feels like we're all deteriorating to like the SSSR times, and like to the Soviet Union basically. You'll have to pay for like, I don't know, 10 times the amount that you normally would have to pay for a goddamn loaf of bread or something. It just really does feel insane at this point. I mean, the prices are really insane, and salaries are not going nowhere near. The job market, the job sector, sort of is in deep doo doo. In fact, we're seeing how companies are having firing waves from left and right, basically. So yeah, I mean, everything that I've been sort of saying for quite a long time that will end up hitting the fan shortly. We're seeing this. We're seeing all of this hitting basically a certain resistance that it can no longer pass, if you will. And coincidentally, wink wink, we have all the factors again. The Democrats are, relinquishing their power. Wink wink, and they're probably affecting all the noise and how media portrays stuff and how they scare us. In fact, I would argue maybe things are nowhere near as bad as they are, but the media definitely are have their hand right now in making an effort that we perceive things to be completely horrible. Very interesting situations we have. The channels that we're hitting on the technical analysis side of things. It just all it's all weird. Those who are in the community know we speak about this roughly on a daily basis. We've been talking about this throughout the entire year. It was less expected for the Democrats to be able to drag things and kick the can down the road so far down the road that will basically all the way to Trump's administration starting, which is phenomenal because I forecasted some of the things just starting to break on them and subsequently things looking very differently, but somehow they were able to kick the can down the road because, well, markets, markets like bullish periods, and even if they're fake and completely orchestrated and manipulated, the markets do know how to take advantage of them, definitely. So yeah, we saw a period that I think we will not see in quite a long time. And again, if you actually listen to the likes of Goldman Sachs, we're entering a lost decade, which could be actually a real scenario. It could be that we're now entering a lost decade, unlike myself predicting that we already are partially gone through half of it, give or take. Of course, it still can be prolonged for 6, 7 more years, but I do think that we've already gone through half of it, which give or take, which is again, like I said, 5, 4, 6 maybe years. Call it 5 with a margin of error of 1 year. So yeah, or a standard deviation. That is it, boys and girls. I think since the market is already closed, I've kind of ran through the vast majority of stuff that is relevant. Tomorrow is going to be a lot more important than today. I would argue that tomorrow we might see a lot of these gains being given back and retraced tomorrow throughout the day, as we've seen the market preparing to be a lot more bearish than it was bullish today. In fact, what we saw today was more of a relief rally. But all in all, we will continue on the path downwards, and the closer we get to Trump's administration taking place, I feel like we're gonna see more of that bearish momentum that we saw in the barrel already prepared. That's it, boys and girls. So yeah, we're coming to the end. We're coming. We can already smell the sea. We're almost there. Almost there. And with that note in mind, I love you all. Thank you for showing up for this live. Thank you all for those who will end up watching this all the way through and coming to this point. I'll remind you to join up Patreon and Discord. Don't miss out. Definitely use the little ticker sticker thingy right there, so you can have the 15% discount, pay the annual, and instead of paying $20 a month or $50, whichever you choose, definitely don't go with the $99 nor with the super supporter unless you really plan to have one-on-one time with me. And yeah, use that little sticky thingy. And it actually doesn't matter. Whichever you use, still use always the sticky thingy because it's going to give you a cool discount. So pretty cool, right? Use it. That's it, boys and girls. I love you all very much. I'll see you on the next one. and see you in the community, actually, those who will join. Bye bye for now.